Well, Fed Week is finally upon us. The Federal Open Market Committee will be meeting tomorrow, Tuesday, and Wednesday in their one of their 8 meetings for the year, and we expect them to announce a widely anticipated rate cut. The big question right now is whether this will be a 25 basis point cut or a 50 basis point cut. We believe it'll be 25 basis points just to get things started, but we do know that opinions vary within the committee. And so we expect some dissension, which we saw last time around as well. Now, with the Fed proceeding with rate cuts here, I think there are some who believe that this is politically motivated or that they are succumbing to pressure from within the Trump administration. Now, there may be something to that, but we do think that the data now supports a Fed rate cut. If you look at the jobs numbers, there's a whole lot of labor market data that we've been getting over the last few weeks, and it shows clearly that the labor market is softening quite a bit. And this is one part of the Fed's dual mandate. It's seeking full employment in the economy. And the latest data suggests that they're starting to lose their grip a little bit. We actually saw last week that initial jobless claims rose to the highest level since 2021. And that's just one data point that we're looking at. Now, some of this could be noise from the fact that the period in which this was measured, it happened to coincide with a holiday. And so oftentimes the data gets a little bit noisy then, but we're seeing enough confirmation of labor market weakness to just to really talk this up to broader weakening within the labor market. So we think it's time for the Fed to get started after taking nearly a year off from rate cuts. Now, at the same time, what makes this really challenging right now for the Fed is the fact that even though data supports a rate cut right now, we're not quite so sure what this means for future rate cuts after the September meeting. We do know that the other side of the Fed's dual mandate, price stability, is still a big question mark. There's a whole lot of uncertainty right now, and we can look at a lot of data here, and such as various measures of core inflation, meaning excluding food and energy prices, that suggest that inflation, the rate of price growth in the economy is still well above where the Fed wants it to be, about 3%. You compare that to the Fed's 2% target, there is still a lot to be desired here, and we've really seen progress on inflation stall out here in recent months, and we don't know whether all of this uncertainty around tariffs will keep that pressure on, or if things like a weakening labor environment will actually bring inflation down. So that's a big question mark. It's something that continues to be debated, but it's why the Fed is likely to take a wait-and-see approach following this meeting. Now, the market is expecting the Fed to continue cutting rates after September, but we'll see. We know that things can change very, very quickly. And so for now, we're going to take it one meeting at a time. And like the Fed, we're going to continue to digest the data as we get it. What this means to investors, look, we've really enjoyed a nice run within the markets. We're seeing the S&P 500 up over 30% since the lows on April 8th. And so it's been a really nice time to be an equity investor. But we also know that things don't go in a straight line forever. We do acknowledge that valuations are higher, and that means the market and investors are now more vulnerable to disappointment and surprises. And so we shouldn't be surprised to see volatility resurface here. We don't know necessarily what that catalyst would be, but it's always important to think long term and just understand that volatility is something that comes with the territory when investing in risky assets. We take this ride on within the equity markets, and we certainly want to see it move higher, but we know it's not a straight line. I'll look forward to catching up next week, and I'm sure we'll have a lot of interesting information to talk about coming out of this week's FOMC meeting, but I'll leave it here for right now. If you have any questions, please don't hesitate to reach out to your advisor. I'll see you next week.